flagship asset. So in terms of understanding Havieron, we're based up in Western Australia, about 45 kilometres to the east of the existing Telfer gold mine. Havieron itself is a copper gold ore body, but what's really unique about Havieron is this confluence of world-class ore body, tier one jurisdiction in Western Australia, but also sitting next to that existing infrastructure at Telfer. And that allows us to leverage that existing infrastructure for this low risk, low capex pathway into production. And particularly what's happened is the timing of the discovery of Havieron. It hasn't been so early that we're sequenced behind the existing ore availability at Telfer, nor is it too late such that Havieron's already closed. It's really been discovered in the Goldilocks zone as far as Greatland is concerned, such that there's this structural alignment with Newcrest. Newcrest doesn't want a gap year at Telfer. They don't want to demobilise the site. So they're very much incentivised to get Havieron into production in what is a very timely manner. So you're seeing what we want to do at Havieron is driving to the ore body and into this southeast crescent, which is a very high 5 to 6 gram part of the ore body, gold equivalent. That includes the benefit of the gold and copper. And by driving into that part of the ore body early, we're going to be able to bring out this high-grade gold, put it through that existing Telfer infrastructure, and that will allow us to generate free cash flow and then reinvest that in the broader Havieron story. So really, through that structural alignment, Havieron is being developed exactly how a mid-cap would like it to be developed. In terms of the capex profile is tailor-made for a mid-cap, drive in with a modest capex profile, develop a high-grade part of the ore body, and then reinvest those cash flows into what we think can be a world-class development. This slide kind of shows you the profile of Havieron. And you can see it's this series of nested infrastructure, so nested intrusives. It's a beautiful vertical ore body, which really lends itself to very efficient mining. And that mining width presently is around 650 metres, around 450 metres across. And it's worth taking a moment to look at that ounces per vertical metre. It's already over 8,500 ounces per vertical metre. You can see where we've been drilling. That's where we've had that's where we've got the highest ounces per vertical metre. Obviously, a very strong correlation between where we've drilled and where we've discovered. And we really feel as we continue to increase that drilling profile, those ounces per vertical metres will continue to walk up. But already that's a stunning ounces per vertical metre, which is a great rule of thumb for understanding how efficient an underground mine can be. But particularly when we're only talking about a 650 metre depth, the capital efficiency of Havieron is outstanding. This just has a look at Havieron in profile. We just spoke, Ben, about the focus on that southeast crescent to start with. In addition, we're open at depth along that southeast crescent, so we continue to follow that ore body down. We've got this structure through the middle of the broader Havieron zonation, the northern breccia target. And what we're doing is continuing to drill and starting to try to link up the high-grade areas across that zonation, which we think is developing very positively. And already kind of we feel Havieron is world-class, But what's also been exceptional is this Eastern Breccia target. Now, we already have a couple of 200-metre plus intercepts in this. This is the new part of the ore body, but we do feel like once we're getting, multiple plus 200-metre intercepts, that suggests we're into, another significant structure and a potential to further grow Havieron. And in our most recent drilling results, you saw a very high grade intercept, again, sitting around 6 grams, gold equivalent over 70 metres. We don't normally see that grade in that Eastern Breccia. So it's interesting. That's another 200 metres to the south. And is that an extension of the southeast crescent? Does that morph that way? Or does that Eastern Breccia have this high grade component to it as well? So there's some, I think really fascinating growth opportunities. In terms of our activity this year at Greatland, it's a really busy environment for us, because what's happened is we've already started driving into this ore body. We expect, and the workflow around that and the opportunities this year, I think there's a number of strong catalysts for value. We expect to come out with the sustainability report in this March quarter. In due course, there's also a JORC resource and reserve update. We've got 9 rigs spinning on the ore body, so that is expected to be meaningful. And as I said, we've got 90,000 metres of growth drilling planned to June 2022. So again, there's a huge amount of drill data to be processed and brought into that and enhance our understanding of the ore body and its size. We're engaged in the banking market as we speak. We have a large number of tier 1 banks looking to work with us. They see this as a brownfields, Newcrest development and that risk profile, so it's very attractive for them. And we have this partner in Newcrest, which is a major, which again I think gives everyone a lot of confidence around the pathway to production, and leveraging that existing infrastructure and the 1,200 people in situ, I think really supports that. We've got the feasibility study coming out towards the back end of this year. And although notwithstanding that feasibility study is coming out, we've already started declining into the ore body. And that's one of the great advantages of working with Newcrest, is they've had the ability to accelerate the whole program. And then the bulk mining opportunity. We've talked about the southeast crescent, which is this sub-level open stope, but that broader zonation potentially lends itself to a bulk mining scenario. And that's when you listen to the Newcrest calls, you'll hear Sandeep and the team talk about that. And then ultimately we're in a pathway where we're in first production in 2023. So that fuse is running pretty fast from here. There's a couple of points I really want to focus though from the studies today. Havieron's remaining capex is just $73 million. That's a very low capex and a very low pathway to production. And within the context of our kind of plus $1 billion market cap, we think that's very achievable and manageable for us, and we'll augment that with the bank debt process. Again, it just reflects the benefit of leveraging existing infrastructure. And that existing infrastructure is Telfer 45 kilometres down the road. And I think one of the real advantages here is, there's been some commentary lately around the increased cost and potential cost blowout of infrastructure creation and just demand for materials and labour. Again, by leveraging that existing Telfer, by leveraging this joint venture agreement with Newcrest, we managed to avoid a lot of that risk and give us a more certain and low capex profile to production. And I mentioned already, it's not just the already we have some 220 people in situ at Havieron, but there's around 1,200 people at Telfer. So again, not having to to find that number of employees in what is a busy and strong labour market in Australia and Western Australia in particular, as we continue to keep the borders closed, is a huge advantage for us. The other point to focus on here is the all-in sustaining cost at $643 an ounce. We think that's incredibly compelling, and because of the, we're kind of somewhat blessed to have just one high-quality asset in the portfolio in development. When we, as a producer, we would actually be the second lowest cost gold company on the planet. So sitting behind the Russians there, but indeed there's probably downside risk in terms of that cost structure. This is all based on a 2 million tonne per tonne per annum starter mine on that south east crescent. Already we've flagged that we're taking a 3 million tonne case to the final feasibility study, so that's already a 50% uplift. In time, there's the bulk mine, but also this assumes standalone operation of Havieron. If Telfer is also in production, there's a sharing of that overhead and that G&A, and it's a high, G&A and processing cost relative to our overall cost structure. So if you are able to increase the denominator across those costs, it actually becomes even more compelling. So I think that's a tremendous advantage to be sitting there, not just in the lowest quartile, but one of the lowest cost mines and lowest cost gold companies globally. In terms of sustainability, I've talked about us coming out with the sustainability report this year and likely in this quarter. Again, I think a lot of confidence can be taken by the fact that we're partners with Newcrest. I think we both share the same values around sustainability and leveraging the existing infrastructure, leveraging the capability to create a mine for the 21st century. I'm conscious of time, so just to wrap things up, this just kind of shows us there in the Paterson. It's a bit of a busy slide there, but you can see kind of down the bottom that yellow marker for Telfer, Havieron 45 kilometres to the east, so a very truckable distance. But equally, we're really excited about some of the footprint we have there in the Paterson. There's no better place to look for gold copper deposits than where they've already been found. And really those structures through the Paterson are to the northwest, and we own the Scallywag tenements, and then into the Jury joint venture directly along structure to that northwest. So we think we have a great postcode for exploration. And the Paterson is elephant country. You've got Telfer, you've got Havieron, you've got Winu, the Rio Tinto asset up to the north there, and it's undercover. And cover is your friend. Why was Telfer found in the 1960s? Because it had an expression at surface. Havieron's found discovered in 2019, so very recently, because it's undercover. And our focus is we think our competitive advantage is to look through that cover and discover. And then we've got the broader portfolio where base metals and copper, which complements our gold copper asset at Havieron. We think some of these opportunities are exciting and give us an advantage to unlock option value in the portfolio. And one of the best ones there is Ernst Giles, an Archean greenstone belt just east of Kalgoorlie. We're really excited about that, and we're just working through First Nations to access that site. So with that, David, thank you very much for your time, and